How's it going, everybody? We're coming up on that time of year where you're going to be filing some taxes and getting some returns. So we're just going to be going over some tips and tricks for you guys.
Absolutely. So stay tuned for this video. We're going to make sure we go through all the points that you guys need to know for you guys filing your taxes, on how you guys can use that to your advantage if you're looking to buy a property.
So with tax refund coming up, can you use that for your down payment to buy a home?
Yes, of course. Yeah, you can use the tax refund, for the usage of purchasing a home. Many out there. I'm pretty sure if you're watching this video, that means that you're expecting some money. When you file your taxes, and hopefully you use this money for the purchase of a property, right? Mm-hmm. The answer is yes. You can use it, right, Nick?
Of course, yeah. Say for example, you're just looking to purchase a home for $100,000. Easy example here. And you're qualified for a loan for 3.5%. And on average, maybe I think people in the U.S. are getting around $3,500 to $4,000 back in their tax returns. So just then and there, you qualify for your 3.5% down on your $100,000 property with your tax returns.
Right. You can use this money for anything, actually. If you have a credit card debt, a car loan that you want to pay off, you can use it for anything. You want to go travel and enjoy, a vacation trip or anything. Absolutely, it's your money. Once you get your money in your bank account, that is your money. You can use it in anything. Now, what is the smarter way to use the money, right? I will suggest, if you're thinking of purchasing a property, you don't want to continue paying rent. I think buying a house, buying a condo, that'll be maybe the best or smarter way to go, right? Now, before you do that, I recommend to go to a mortgage lender so they advise on what are the things that you need to do. Maybe it's a good thing, that you plan on paying that debt, right? Like credit card debt. I think that will help to increase your debt to income ratio, right?
Right. And another thing that's overlooked a lot of times is, a lot of people, you might already have the down payment, but this tax refund, you can definitely put it towards fixing up your property and just using that to boost its value and getting an immediate return on your investment.
Not just that, but you can also use it for furniture. Yep. Modifying the home. Every time you get your home, you always want to do something to it, right? Little things, yeah.
Yeah. Say you even qualify for a zero down loan, like a VA loan or USDA kind of loan. Maybe you don't need to use it for a down payment towards your house. You can use that towards, like Priscilla said, paying off any debts, credits, and again, you can even use that towards closing costs. That's a big deal.
Well, I have a client filing taxes. She wants to know, is a tax refund a good thing?
Yeah, I think it is a great thing, especially, I want to say, a lot of people get tax refunds, right? And, it's a way, from the government to help those families, to get some extra money at the end of the year, right?
Yeah.
Now, you as a family member, right, or as the head of the family, it's up to you what you do with that money, right? But I think it's a good thing, as far as you qualify for it and you can get some money back, it's a good thing. You work for it, right? Maybe you have those dependents who, depend on you, right, to provide for them, right? So, but, in this video, we want to make sure that you understand that tax refund can be used for the purchase of a property, right? If that's a possibility on your end, you got to choose between continue renting, maybe pay 2 more months or 3 more months without tax refund, or take that a step, for the purchase of a property, right? So, what do you guys think is going to be the best thing to do?
I going off that point of buying towards as opposed to renting, think about it. If you're renting, every time you pay per month, that's going towards the owner of the home who you're renting from. That's money that you're losing completely. If you're going to be paying a mortgage instead, if you were a home buyer, you're just going to raise the value of your property over time. And you're going to grow your equity by being a homeowner and putting money towards the mortgage.
Yeah, and don't take us wrong, right? Maybe buying a property and building equity, for your future is not for everyone, right? You might want to continue renting for for the time being, and maybe 10 years later you're going to figure this out. How much you pay in rent, $1,500 for 10 years? How much that is, right? From now on then. If you do the math, you're going to find out that that's maybe over $100,000. That could be part of the purchase of your own property, your own investment. And remember, an asset, real estate asset, is going to build equity over time, right? We have a client, who purchased a property back in the 1990s for $250,000. It was in Beverly Hills, right, area. Now the property is over $6 million. That's crazy, isn't it?
It's wild, yeah.
I mean, where are you going to get that type of capital gain, right?
Yeah, and I think if you're still maybe a little confused, like, do I still want to continue to rent? Is it my time to buy? Come on in and talk to us. We're always having buyer consultations, just explaining to people if it's the right time for them, going over pros and cons.
Well, another point we want to touch base on is, purchasing a property without having 20% down. And, one has to wonder, especially being in the Los Angeles market, 20% down is a lot of money. A lot of people don't even have that much money. Is it even worthwhile to put your tax refund, some things that people are averaging $3,000 to $4,000? Is it even worth putting that into your down payment?
No, I would say, of course it is. I think anything would help. Especially now, we need everything with the market the way it is right now in 2020, 2021 it's going to be, which I think is going to be the same as 2020. But the down payment, you need everything you can. You never know what unexpected costs are going to come in while we are in escrow or not. And, it's crazy, the market with the down payment, how much. Of course, the more you put down, the stronger buyer you are. But if all you got, you're a first-time buyer, and all you have is that down payment to help for your 3.5 down payment, then it's a shot, versus renting, or, it's better to give it a shot to purchase a home. And then if you get with us, we've been very creative with our offers and helping our buyers in this tough competition to get accepted,
Right. And I think that comes with experience, right? As much as we do that, we find ways to improve on how we present ourselves, represent our clients, towards the purchase of a property, right? When you're purchasing a property and representing a client, you have to build a really good relationship with the sellers and find a way to present your offers to the sellers. I don't know if you remember, Priscilla, the client that we closed, he purchased a property in, where was it, Montebello?
San Jacinto, maybe?
No, Montebello, with this lady who was coming from San Francisco, right? Do you remember them?
Yeah.
Okay, so they got a veterans loan, right? With 0% down.
Oh yeah.
0% down. I'm bringing that up because a lot of people, based on what you said, a lot of people think that they cannot buy and then just give up, right? They get their tax refund and they say, let's just have fun, right? And we won't be able to buy a house. No, man. I mean, you're giving up right away, right?
Yeah.
This family. Do you want to talk about it, Priscilla?
Yeah, it was actually a VA loan.
A VA loan.
They bought a house in Covina, and it was like around 7 something.
Over 700,000, 765. Yeah.
And they were able to purchase it with 0 down. They had minimal amount, of which all they needed was for the closing costs. And it was tough for us to get them an offer, like to get their offer accepted, because people are coming in with 20% down, and
Or
we
cash
were competing,
offers.
and cash offers, and we're coming in with 0% down. And all we have is those, funds, those minimal funds, maybe from your tax return or whatever it was that we needed for the closing costs, but we were able to sell, our clients to the seller, right?
Yeah. There are several programs, government programs out there that you might not know about it, and that's why it is crucial that you speak to a mortgage lender or real estate agents, as who are doing this on a daily basis. There are ways, and even if, worst case scenario, you get your tax refund, you come over to us, to the lender, you talk to us, and for some reason, it is not possible to get your property at this point, well, at least you find out what are the things that you need to work on. If it is your credit score, your debt to income ratio,
much you need
debt
to
to income
save.
ratio, rate to income ratio is how much you owe. If you owe more than what you are making, then your debt to income ratio is going to be too high, so you might have to work on it, right? So that's what I mean with debt to income ratio, right? Maybe you have to pay up some debt, or maybe you have to bring a cosigner. My point here is that if at this point you cannot purchase a property, maybe there is a solution to it, right? And it may take time to get that resolved, right?
Yeah, well, with this family that bought in Covina, they took a while, not a while, but they had to repair their credit, which we did that, save up a little bit. They did that. They actually had to get married.
Right.
Because they were VA, right? And the VA doesn't let you use the income of another person. You can't have a cosigner with VA unless it's like a VA, they're your wife or husband. Then you can count that income. So there's a lot of things to the financing and the programs. So it's best for you to get with us and ask.
What about combining a tax refund with a down payment assistance program?
Oh, definitely.
Absolutely.
Okay.
Yeah.
Yeah. And that's why it is important, to talk to a mortgage lender to see how it works, right? Before they do anything, right? Paying off debt or anything like that, they can talk to the lender, and the lender will guide them in a way that they may be able to qualify, right? Or just find the best way to work it out.
Yeah.
Now another thing is, I know out there, many small business owners, they try to, put a lot of expenses on your tax returns, right? And report as little as possible. But then, if you're thinking of purchasing a property, that's going to be an issue, right? So if you are still on time, before you file your taxes, talk to us, talk to a mortgage lender, and see what is the best way to approach, especially for 2020, right?
Right. We have some lenders that are really good at what they do, and we've been working with them for a while, and they're able to structure the loan, and tell you what you need to do to be able to purchase, either pay this or that, or maybe include it in the sale. Like we've had clients that had to pay off their car and in the sale of the property or other debt. So you might not need to right away pay it off before. Some people think that you might need to pay off the car first and then get pre-qualified. If you're thinking about purchasing at all for whatever reason, just contact us. We can get you with one of these lenders and help. They'll let you know, pay off the car first and then come back and we'll do this. Or no, you can do this, that. We have some very creative lenders that can do that.
Absolutely, and it comes with experience, right? I think the lenders that we've been working with, they are over 25 or 30 years working in the same field.
Yeah.
In mortgage officers.
Yeah, they know all the ends, how to work it, and they know what they're, and they're direct lenders. They're not brokerage, so you're not paying any extra fees that you don't even have, that you barely have to go to the down payment and closing costs. So brokers charge you that. So we work with direct lenders, which is awesome. But I was going to say, if you're planning on doing your tax returns, get with us as well, especially those who are self-employed, like you were saying.
Right.
And our lenders can tell you exactly where you need to be at so that you can purchase a certain amount. If you want to purchase in this city, in this town, we know a price range. We know it's like 500 or 600. We can tell you, hey, you need to be at this much income to be able to qualify for that.
Right. And with that being said, for all these lenders out there, if you are a broker or working for a big bank, nothing against you guys, nothing against anyone.
We work with them too, yes.
We work with you guys too. It's just different, right? I believe there is pros and cons, working with mortgage officer in a big bank, working with a broker, working with direct lenders, right? There is pros and cons.
Yeah.
Our message here is, to you, home buyer and even home sellers, there are different types of lenders out there.
Yeah.
I would suggest, to kind of interview or talk to 2 or 3
around.
and choose the best.
Yeah, get around 3 estimates or whatever so you feel more comfortable.
Absolutely.
We covered a lot here in this video. Anything we didn't cover and you have questions on still, please leave a comment below. And also,
Comment, like, and subscribe.
that's right, smash the subscribe button.
Smash the subscribe button.
Yes.